What up, Hyperchange? Welcome to another episode. This is Netflix's Q3 2017 earnings recap. They're one of the first big tech companies that reports earnings. Netflix ended the quarter with over 104 million paying subscribers. That's right, 104 million accounts that are paying Netflix a monthly fee for their service. They added 5.3 million of those in the last quarter alone. In the last 4 quarters, they've added over 20 million paying subscribers, going from just over 83 million to now over 104 million. The growth has just been phenomenal here. Are we getting anywhere close to seeing Netflix tap out of their addressable market? It doesn't look like it. Q3 streaming revenue was up 33%, driven by a 24% increase in the amount of memberships and a 7% growth in the average selling price. So there's this combination of slightly raising prices along with growing to a bunch more customers that is driving Netflix's growth. It's a really sticky business model. Netflix is not something you're likely to cancel on a month-to-month basis. Once you're a subscriber, you're likely a subscriber for years, if not in perpetuity. I call it TV as a service. If you look at this chart, Netflix, with their the quarter they just reported, is now almost at an $11.9 billion revenue run rate. This is up from just $9.2 billion in Q3 2016. The business model is churning. They're investing heavily in growth, and it appears to be paying off. So now let's dive into the numbers. Overall, revenue rose from $2.3 billion in the quarter to $3.0 billion. This was growth of 30%. Now remember, I said the streaming business growing at 33%. There's still a little bit of DVD revenue in here. That's slowing down the overall growth rate. Operating income is up a significant amount, almost 100%, but I would argue this operating income is kind of a questionable metric. We'll get to that later. If we adjust these numbers for the first 3 quarters of 2016 versus the first 3 quarters of 2017, we'll see the growth once again looks really strong, coming in at 32% for the year so far. Operating income up a whopping 163% from $230 million to $590 million. So it appears that there is some sort of economies of scale going on with Netflix's operating business, or at least the way they do the accounting. But if you take a look at their free cash flow, it's still growing and negative, and it's bigger than ever. The free cash flow for the first 3 quarters of this year is $1.3 billion, a significant increase from the $920 million that they reported in the first 3 quarters of 2016. So this is kind of a confusing way to do the accounting, but the way to think about it is Netflix's core business, at least this is what they're telling you, their core business actually is profitable and would be making money, but they're choosing to also invest billions of dollars outside of that into content for the future years, and that is why they're losing money on a free cash flow basis. Netflix also just announced that for 2018, they will be spending between $7 to $8 billion on original content. This is a record. This is more money than Amazon is spending this year on original content. So they're basically telling you, we're not even going to make any more money next year. We're doubling down on this spend billions of dollars on original content strategy. It's not going to change next year at all. In fact, we're just going to accelerate our losses because we think the opportunity is big. Whether that works out or not, we'll see. I will note that all of this spending has kind of led to debt. So they do have a bunch of long-term content obligations, but they also have a bunch of content assets. So I didn't want to get into that, but I did just chart out the cash and short-term investments versus the long-term debt. So you'll see versus what they ended 2016 at, their cash is stayed about the same, but they've been increasing their debt load to almost $5 billion. And I don't think this is a worrisome amount of debt, but I do think it's important to note that Netflix has a sizable amount of debt. They're not making money. They're choosing to stretch out their balance sheet to invest in original content. Let's turn to the valuation. With 450 million shares outstanding at today's price of $200 per share, we're looking at about a $90 billion valuation for Netflix. Remember, Disney is trading at $157 billion. On a price sales basis, my estimates are going to be about $11.5 billion in 2017 revenue. So they're trading about 7.8 times price sales. This is really expensive, but remember, they have that TV as a service business model. Look at this recurring revenue chart. It is booming. This is going to be a nonstop growth machine for years to come. That's no secret, and that is why people are paying a premium for their current sales. On a price EBIT basis, this is the operating income number, which is positive, even though I'm not sure I buy it because of the free cash flow discrepancy. I'm projecting, based on what their operating income has been through the first 3 quarters, that they can do about $800 million for the year. If we assume that is the core earnings power of the business, then we're looking at even still 113 times price EBIT. You know, everyone's like, oh, it's 100 times PE ratio. It's absurd. Yeah, they're right. Netflix's PE/EBIT ratio this year is absurd. But remember, investors today are buying for growth. You don't want Netflix to be maximizing its profits today. You want them to be investing for the future tomorrow because they could build a much bigger company. And what is this real growth strategy of how Netflix is keep growing? I broke it down in a quick slide. They're going to ride the streaming wave. There's 4 billion people on the planet with an internet connection. Netflix only has 104 million paying accounts. They could triple or quadruple their user base and still only be 10% of internet users. They are just going to be able to continue to ride this wave of more people on the internet, more people watching streaming services. They become cord cutters, and that is the biggest backbone of Netflix's growth the next couple years. Additionally, they're going to go global. They're going to continue doubling down on international expansion. This is something the company has focused on heavily recently. In fact, just this quarter, or maybe last quarter, their international subscribers were bigger than their US subscribers. What is their strategy to grow domestically? Raise prices. Netflix is clearly an underpriced service. I would argue they're providing a ton of value, investing in all this amazing original content, and people love it. You know, they raised prices just a couple weeks ago. Nobody noticed. I don't know anyone who's talking about the price increase on a consumer level who's pissed off because the service is so good. In the long run, they could double the prices from where they are today, and they would still have just as much of a market penetration. You're going to see them slowly and consistently raise prices, and that is going to be a big driver of growth in the near future. Then, this is the fourth one. This is huge, and this is why I think it makes sense. Like, you can't value Netflix on current financials. These growth companies led by visionaries are really hard to look at if you're looking at the financials, which are basically watching the company in a rearview mirror. Netflix in the long term could easily evolve into a Disney-esque powerhouse where they launch merch, toys. They have all this original content, which is developing brands, Stranger Things, House of Cards. You know, all these original shows could eventually turn into a Netflix world. I don't know, and maybe it's too early, and maybe none of the original content they've done so far meets the bill for this, but in the long run, Netflix owning their content and this vertically integrated strategy is going to open up doors for merch, for toys, for parks, just like what Disney does with Disney World and the Star Wars theme park they're building. In 3, 4, 5 years, the way that Netflix really takes its business to the next level, and that could justify a significantly higher valuation than where they trade today. That's my Q3 wrap up. A solid quarter for Netflix. That's Hyperchange. See you guys next time. Peace.